Curzio here with another live video, and it's titled, "If the Democrats win Georgia tonight, you need to buy these two sectors." Now, before I even get into this, put your emotions aside. I don't care if you're Democrat, Republican, it doesn't matter. This is about you. We know by now our politicians don't really give a shit about us, right? They only give a shit about themselves and power, right? That's what they care about. They don't care about us. So the stimulus bill would have been passed a long time ago. This is about you. This is how you make money off of this if this event happens. Again, keep the emotions out of it. And Bank of America came out with a report today. It was interesting. It's from January 5th and talking about Georgia and saying Biden's proposals, if they take Georgia, it's a blue wave, then he's going to get, again, they can do pretty much whatever they want with Biden campaign on. And based on his promise to raise capital gains taxes, they're predicting a 7% hit to S&P 500 earnings, right? Most of it's going to come from higher corporate tax rate, which is interesting. Now, remember that 7% number, because when you go to 7%, why is that such a big deal? Is when you look, and I just kind of quick that I brought up, an analysis on this, and just take it from 2002, if you're taking all of these and just a simple average, earnings have grown by what? Right here. This is 7.6% on average annually. And remember, going back to the 7%. So you're looking at earnings growth are going to slow considerably if Biden gets in based on what he's saying and how he's going to raise taxes. And it may happen in 2022, but the market's forward looking. You're going to see them get hit right away. So we're going to see earnings growth slow, which makes sense, right? Because when Trump decided to lower taxes, we saw earnings explode higher the following year. So why is that relevant right now? Why is it relevant today? Which I feel like this is not too many people are talking about. Now, let me bring this up and share this. So this is from FactSet. I'm bringing this up, guys. This report right here is 32 pages for free on FactSet. So it's kind of amazing, page 12, but it's 32 pages of earnings. They break them down and everything. It's cool. You can find this. Just go to Google FactSet earnings. They actually publish this for free. It's a great valuable too. But this is why it's important, because the valuation of forward P ratio is 22 right now, above the 10-year average of 15.7, way above, right? And even if you're looking at way above the 5-year average, 17.4. So we're trading at pretty much one of the most expensive valuations that we trade at in many years, decades. You go back to certain periods like .com and maybe in the middle of 2008 when earnings were all over the place, but this is one of the highest valuations we've ever traded at. And now you're telling us that earnings are going to decline. What does that mean? It means that the market is going to continue to be supported by two things: stimulus and low interest rates. You're going to see that wage gap widen tremendously. This is what's supporting the market right now. If you're not going to see earnings growth and you're trading at a super expensive multiple, what is going to support it? Low interest rates. They're going to be lower forever. They have to keep them low because the market will come down considerably if they don't. And you say, well, the Fed controls short-term rates. That's correct. But long-term rates, if they start going higher, the Fed will implement yield curve control, which they've done in the past. This way they cap the interest rates. They have to because they have so much debt they're not going to be afford to pay it. So you're going to see interest rates low forever. You're going to see more stimulus coming out from central governments, not just from the U.S. and America. Those are sectors. People talk about buying environmental friendly or if it's a blue wave. You guys know the sectors. You can Google them. But the two sectors you need to own are Bitcoin and gold. Right now, own them. If you listen to us, you've owned them for many years, over 3-4 years. Gold even longer, and you're doing great on these recommendations. But even long term, it's going to be an even more powerful trend if this happens, because we're going to have to keep interest rates lower much, much longer. You're going to see more companies taking risk off the table. They're going to be buying gold and Bitcoin, both of them. Yes, they both could coexist. It's not one or the other. I know you guys, there's people on both sides of religion and they hate each other. But bottom line is you're buying these things pretty much for the same reasons. Those are two sectors that people aren't talking about. You should be invested in them right now. But I increase my exposure after those elections with Democrats tonight because long term, this trend of more stimulus, this trend of lower interest rates, it's going to last much, much longer than expected. And you think Bitcoin prices are high at 32 and gold at 2,000, wait 6-12 months from now when these things really explode if this happens. So those are two sectors that I like. As always, I'll report back to you guys soon. Be sure to check out our Curzio Research YouTube page where I post a lot of live videos and also our podcast, which is going live tomorrow. So you'll see that on our Curzio Research YouTube page. Be sure to subscribe. And as always, I'll report back to you guys soon. Take care.